Hi everyone, I'm Zakia and today we will be discussing bank account reconciliation with the cash book balance. So what exactly is this concept? Basically we reconcile the being shown in your bank statement with the balance shown in your cash book in order to know the exact balance, that what exactly is the cash balance at this time. So let's suppose uh, you are running a business and exactly on January 31 2020, on this date you check your bank statement and your bank statement shows a balance of $10,000 in your bank account. It means you are having $10,000 cash in your bank account. On the other hand, your cash book, your record, uh, your accounting record shows that you're having $8,000 cash in your account. So you can see there's a difference of 2,000 between the two balances. Your accounting records show you a balance of 8,000, whereas your bank statement shows you a balance of 10,000. So what exactly is the cash balance of your business as at January 31 2020? In order to reconcile this, we need to look at some important items. For example, okay, now just think that on 31 January 2020 you have issued a check to your supplier, and in your cash book, in your accounting records, you record this transaction as that your cash has been credited. Okay, you have issued $1,000 cash to your um, supplier, and you have recorded this transaction in your cash book. So according to your cash book balance, you have already deducted $1,000 from your cash book balance. Whereas on the other hand, your supplier uh, presents, if your supplier has not presented that check yet at bank, and so bank has not recorded that entry, that transaction in its records. So it means that as on 31st January we will deduct those $1,000 from here in order to reconcile the balance with cash book account. So, outstanding checks are those checks that are issued by the entity or business, but those are not yet cleared by the bank. So, as I have given you example that the supplier, when supplier will present that check, the bank will clear it. So, at that time, the bank will show a debit of $1,000. So it means that this was one of the transaction outstanding checks which was already recorded in the cash book, but it was not considered by the bank account. Obviously, the bank has not received any check yet. On the other hand, if even if bank has received that check from the supplier, but bank has not yet cleared that check. So even in that case, bank statement would show a balance of 10,000 without deducting those 1,000 from the balance. So when you reconcile, for the purpose of reconciliation, you deduct outstanding checks amount from the balance as shown on the bank statement. Okay, in the same way, now I'll come towards outstanding lodgements. In the same way, outstanding lodgements are those checks that have been deposited in the bank, but the bank has not cleared them. Which means that suppose exactly on 31st January 2020 or even a day before it, you have your customer uh, has sent you a check, and when you have received that check from your customer, you have recorded it in your cash book, in your cash book balance. You have recorded that check in your cash book balance, but when you have sent that check to your bank for its lodgement, your bank has not yet cleared it. So it means that check has been deposited here, but bank has not yet cleared it, and it is not showing that $3,000 amount in its balance. That's why we will add this. In order, why are we adding it back, or we are deducting outstanding checks balance? Because we need to know exactly what should be cash balance of business as on January 31. Now, outstanding lodgements are those amounts, or outstanding checks are those checks which are deposited but not cleared in the bank. Which means, now one more thing, when customer send that this $3,000 check to you, it means to your business, you have made an entry in your cash book accounts, in your general ledger account. So you have debited this amount, but on the other hand, bank has not, it has not yet been credited in the bank. That's why you will add that outstanding lodgements amount or outstanding checks amount in the bank balance, which is being shown in the bank statement. Now we have, after making these adjustments, deducting 1000 from 10,000 and adding back 3000 in the in that amount, we have got the adjusted balance, which is 12,000. Now this adjusted balance should be the same, because this is the exactly cash which you, at this time your business is having. We have to keep in mind that what balance, what cash amount at this time is business having. So 12,000 is the exact amount that your business is owning at January 31, 2020. Now we will prove this same amount on the other hand with the cash book, and what adjustments we need to make, we will see it now. Okay, sorry, I'm just making adjustment for it. Yeah, sorry for this delay. Okay, we can see that in our cash book record, balance as on 31 January 2020 is being shown as $8,000. Now, one thing to keep in mind is that we have to see here that what are those adjustments which are already made in the bank account balance, but we have not recorded that. Okay, now listen, bank charges its fees for providing its services. Okay, now we are not it your business does not know, and you does not know that business has deducted those charges from your bank balance, and that's why you have not recorded yet in your accounts in this value $8,000. So on the other hand, bank has already, the bank statement balance is showing that bank has already charged fees and it has deducted from your balance. Now $200 are the bank charges. So we have not recorded in the accounting record. So first we will deduct this $200 amount from our accounting deducts to know the exact balance, that what exactly cash we have. So we will deduct it from the $8,000. Sorry. Okay, next thing, bank also gives you interest on your bank balance, and the interest which it we can say that which you are going to receive, it has already been included in your this bank statement balance which your bank statement has shown you. However, on the other hand, you have not recorded this entry in your cash book yet, so interest received should be added in this balance over in your cash book balance. Now on the other hand, any amount which is credited directly into your bank but you have not yet recorded in your cash book should be added in your cash book balance. For example, customer pays through online means to your bank account, to the business bank account, but you are not but it's not in your knowledge that the customer has paid that amount, but upon investigation you come to know that that customer has credited into bank the $3,200. So but you have not yet recorded this transaction in your cash book, so you will add back this balance in your cash book. So again we can see that the adjusted balance would be 12,000, same as In case of bank statement balance 12,000. So I hope it's much clear to you. And if you have any questions regarding this concept, please let me know in the comment section. Thank you.